Well, hello and welcome back to Principles of Accounting 2. I'm your host, Dr. B, and we've made it to the midterm, with the halfway point, if you will, in the semester. We are in week 7, right? Six or seven, seven. Uh, yeah, we're in week 7. We're in week 7. Pretty amazing that we got this far. We all survived for the most part. Almost all of you are doing extremely well. The vast majority of the students in this course commonly earn A, B, or C grade. Okay, I've only lost a few patients, and that was because they didn't do the work. Now, guess what? I know it's a shock, but if you don't do the work, you don't pass. Wow, unbelievable. So, but the vast majority of you are passing, which is fantastic. In fact, not only are you all most of you passing, not all of you, but most of you are passing. Uh, you're not only just passing, you're passing with A's and B's, which is fantastic. It's phenomenal. That means you're taking advantage of the ability to take homework assignments and quizzes more than once. You're meeting with tutors, you're meeting with me in office hours, you're doing all the right things to try to learn. And that's what it's all about. If you put in the effort, you'll get a great grade. That's honestly as simple as that. Uh, Accounting, as I had said, is a practice. The more that you practice things, the more you will learn them. So what I'd like to do right now is I'm going to do two things. Number one, I'm going to put this in student view so it looks exactly like the way you see it. So number one is I want to call your attention to the modules. And within each week, with the exception of week 2, there are these things called exercises. And if if you look at the exercises and you download these Excel files, click on the 3 dots, download as original file, it opens up. Whenever it opens up, it looks like this. You know, they're very straightforward. It's just you select the response from the drop down. The reason why I'm calling this to your attention, these practices, the exercises, is they're really helpful. They're really helpful for you to look at a bunch of random questions and apply what you're learning, right? So this one is about looking at the differences between financial and managerial accounting, which, by the way, uh, is about 3 questions on the midterm exam. Is knowing the difference between financial and managerial accounting. So what I think, uh, yes, yeah, yeah, Mark, this is being recorded. Thank you for asking. Um, what the reason why this is so important is because uh, the practice will help you to apply what you learn, and that's how you remember things, right? And so I'd like to strongly encourage all of you to work through these exercises because they'll really help you to apply what you learn. And those are embedded in each week, right? So chapter 18 has 4 of them. Uh, Chapter 19 I think has a few of them. 20, 21. The midterm exam, which is what we're about to go over, covers chapters 17, 18, 19, 20, and 21. The midterm exam, I'm about to open it now in student view, so we'll go through each question. The midterm exam is 20 questions. It can only be taken once. It is open book, open note, open whatever, right? Earlier, I'd sent out an announcement yesterday. The announcement was if you review the PowerPoint presentation, lecture notes, review your notes, review the textbook, review the lectures, there's no reason for you not to pass. Okay. My Also the exercises that we just talked about They're really important because, as you can see, even with this first question, the exercises are directly related. The other thing that you really should look over are your previous homework assignments and quizzes, because you'll find that the questions are extremely similar. In fact, some of them are the same questions. Okay, so please, my recommendation for success on this midterm exam are to look at the PowerPoint presentations, review your notes, try the exercises for each chapter, uh, go over the homework assignments and quizzes, and of course, look at some of the videos if you need to. Right? So let's walk through these questions, and I'll talk about where you can find them, and we'll talk about how to read the questions. Because the vast majority, the reason why some students might miss a question on an exam, and honestly, this is the same for any exam, is the reason why you might miss it is because you didn't read it properly. Now, what I mean by reading properly is identifying the key terms. Once you identify the key terms in the questions, it becomes much straightforward, right? It's all about how you're reading the questions, and that is honestly the whole crux of passing any exam. So let's take a look at each question. We'll spend about a minute or so on each question, talking about where to find it, looking at the key terms, and then deciphering what is the correct response. Now, again, I'm not going to give you the answers, but I'm going to show you how to be successful on this exam. So the first question is, which of the following items does not represent a difference between financial and managerial accounting? Now, the differences between financial and managerial accounting, that sounds to me like, that might be chapter 18, if I'm not mistaken. So how do I know that, right? So if I go to my, let's say the PowerPoint presentation files, okay? And I'm like, this first question is about the differences between financial and managerial accounting. Well, if and I'm just like you, I'm not going to remember everything. So let's take a look. Well, it's definitely not 16 because that's from 201. Is it 17? Maybe. I don't know. Let's see. It might not be 17. I think that might be analysis. So that's not 17. So it's got to be 18. So what you'll find is the majority of the questions on the midterm exam come from chapters 18, 19, 20, and 21. So the cool thing is that the questions pretty much go in order with the chapters. So that first question is the differences between financial and managerial accounting. Now, if we remember correctly, managerial accounting is the focus on non-financial information for managers to make decisions. Remember, the managerial accounting part, which is what this whole course is about, is internal documents. Internal, meaning they're not published, they're used by managers to make decisions. So that's managerial accounting, right? And it tells us right here. But take a look at this. Man, don't you think this slide might come in handy for answering that first question on the midterm? I think it would. So here's my slides. Chapter 18, slide 6. I come to my midterm exam and it says, which of the following items does not represent a difference between financial and managerial accounting? So I have 5 options here. Timeliness of information, flexibility of reporting, a focus of the information, users of the information, and last week, which is fun. Managerial accounting does not focus on does not use the financial information from the financial accounting system. Well, so if I look at this slide, and I'm looking at the differences between financial and managerial accounting, and I'm thinking, okay, well, if the question said, which of the following items does not represent a difference? Does not represent a difference. In other words, there's no differentiation, right? Does not represent a difference. So, is it users? Well, I see some differences in the users, so probably not users. Purpose of the information. Flexibility of reporting. Well, that's a pretty big difference. Timeliness. Well, that's a pretty big difference. So we're drilling down here, and I'm looking at my options. I'm looking at slide 6 from chapter 18. We can probably decipher which one it is, right? So, well, timeliness is a big difference. Flexibility is a big difference. The type of information is different. The users are different. Well, that only leaves one option, right? So, question 1, chapter 18. Slide 6 will certainly help, but it's obviously always best to identify the difference between financial and managerial accounting to find the correct response for question 1. Questions so far? Okay. All right, great. Let's move to question 2. Oh my goodness. If any of you missed question
I don't
2,
have a question. Excuse me, Professor. I don't have a question. Actually, I got a statement because you just made me realize something, and it helped me out a whole lot just now.
What's that?
Because I have a lot of anxiety when it comes to taking tests.
Me too.
And when it comes back to going back to the information, looking for it, I go through a panic attack.
I know.
because
yeah.
And it'd be right in front of me. And you just made it a little bit more simpler. You just made it a little bit more simple how I can do that.
It's my pleasure. And it's and a lot of it has. And Ms. Rhodes, you raised an excellent point about anxiety, because I also suffer from extreme anxiety at times, especially when I'm under pressure, right?
Yes,
And
yes.
so the one of the things that I want you to think about is that this exam is open right now. Okay, you can open it up. You can look at each question. Take as much time as you need. All right. And I'm telling you, if you start early and just read the question, take your time focusing on the chapter, focusing on the the information at hand, reading the question carefully, you'll be all right. It's just a matter of trying to take that pressure off of yourself, right? Because when we're under pressure, like some of you, I know some of you very well. I've taught some of you in the past, almost all of you, and I know you guys. I know you guys. Okay, so, and I know myself, and I do the same. I'm as guilty as y'all. Sometimes I wait to the last second to do homework. All right, and I know some of you do that too. I know you do, because I see your habits. All right, I'm as guilty as y'all are, and I'm telling you right now, please heed my advice. Do not wait until next week to take this exam. Okay? Start it early. Again, you can save it. Your work will be saved after you select the question, the one that you like. Just don't click submit. If you click submit, it'll submit it. Okay? But if you click save and close, it'll save and close it. What I'm saying is there's no timer. There's no need to wait till the last day. Don't wait till the last day. Don't do that to yourself, because that's what causes even more anxiety. The last thing I want any of y'all to experience is a panic attack because here you are in the 11th hour trying to figure out this exam. Don't do that to yourself. Please start early. I apologize. I'll get off my soapbox, but I just wanted to echo what Ms. Rhodes was talking about with the anxiety part, because I feel you on it. I do. Okay. Now, let's take a look at question 2. Question 18, as we said, it's chapter 18. One of the best parts to look at is slide 6 from the PowerPoint presentation, because it summarizes things for us. And read the question very, very carefully. It's asking, which of the following items does not represent a difference between financial and managerial accounting? So the two key points here. The difference between financial and managerial accounting. Okay, it's important to know the differences between the two. And the other most important part of that question is which does not fit. Does not fit. Right? So very, very important. Which is not a difference. So just be very careful the way you read your questions. Question 2, also very important to read. Question 2 has to do with this thing we've been talking about the past 7 weeks, called the cost of manufacturing. Let's take a look here. It's talking about labor specifically. Now, the way this reads, it gets a little, I'm not too sure, because we see all different kinds of labor as options. It's so important for you to remember the definitions. This is a definition question. It's just worded a little differently, but it's a definition question. Now, let's read through it together. Question 2 says, labor costs that are clearly associated with specific units of product because the labor is used to convert raw materials into finished products is called. Now, there's one very clear part of this question that tells us exactly what the answer is. Clearly associated. Labor costs that are clearly associated, meaning I can track the labor hours to the cost of manufacturing this product. If I can directly track the cost of the labor to the product, we know which one it is, right? We've been talking about the cost of manufacturing. As you recall, the cost of manufacturing a single product is direct materials, direct labor, and factory overhead. We know that we can directly trace the cost of materials and labor to the manufacturing process for a single product. So clearly we know which the response is. So again, it's all about reading the question very carefully. Labor costs that are clearly associated with specific units of production because the labor is used to convert raw materials into finished goods. The employees that are working on the assembly line, those are our frontline employees, They're the ones working directly on the product. We know what the answer is. Again, it's a definition question. So if you go back to chapter 18, and we're talking about labor cost, and it was very clearly said, clearly traceable, yeah? I'm thinking, interesting. Right. Okay, so chapter 18 is going to also be question 2. It will help you to identify the correct response. Any questions on any questions on labor costs? Good. Okay, great. Question 3. Oh, I love question 3. It's a math question. Oh God, Dr. B, I thought you said, yeah, it's a math. I know, it is. You're right, it is. Okay, but it's a relatively simple math question. Let's read through it together. If the beginning and ending work in process inventories are 5,000 and 15,000 respectively, the cost of goods manufactured is 170,000. What is the total manufacturing cost for the period? So the question is asking us, what is the total manufacturing cost for the period? There is a formula to help you to answer this question. Now, and I'm going to try to remember what chapter that question or that formula can be found. And let's think here. Manufacturing cost. The total cost of manufacturing. What was the question again? Total manufacturing cost for the period. Total manufacturing cost for the period. That sounds awful familiar, doesn't it? Total cost for the period. Well, this is fast here. Well, obviously this is not like the same, but it's pretty darn similar. So let's walk through this one together, because I think, if I'm not mistaken, we did talk about this somewhere, and I know that there's a formula for it. So let's, isn't that fascinating? Okay, so let's take a look at the question. Question 3, also probably my guess.
Excuse me, Professor.
Yes, Ms. Rhodes.
That slide, it will check number 28 on page 28 on the slide.
Page 28 on the slides.
It looks, it has.
Oh, look. Oh, yes. Oh, thank you, Ms. Rhodes. I do appreciate that. Yes, Ms. Rhodes. Thank you again. Yes, exactly right. So we're talking about manufacturing. So at the bottom of this slide, we see it says manufacturer. Beginning finished goods inventory plus cost goods manufactured minus finished goods ending inventory. Let's take a look very carefully at the question. So I guess my guess is chapter 18 is probably where you're going to find this. It says, if the beginning and ending work in process inventories are 5,000 and 15,000 respectively, so beginning 5,000, ending 15,000, and the cost of goods manufactured are 170,000. is the total manufacturing cost for the period. So, let me think about this for a second. It's total manufacturing cost for the period beginning, cost of goods manufactured minus ending. So beginning was 5,000. So 5,000, okay, plus cost of goods manufactured. Cost of goods manufactured is 170. So 5,000 plus 170. My calculator. 175. Oh, actually, I don't know if this is that doesn't sound right. Let me explain why. Because there is an easier method. There's an easier method. There's an easier method. Cost of goods manufactured. Let's walk through this. So, cost of goods manufactured. So if I take my cost of goods manufactured, well, it should work. It works the same way, right? So let's take a look here. My cost of goods manufactured is 170. Oh, it's asking us during the period, of course. That's the difference. What is the total cost manufacturing during the period? During the period. The cost of goods manufactured is 170. It says during the period. I started 5,000 and ended with 15,000. I started with 5,000, I ended with 15,000. That means I must have processed or produced, I must have produced 10,000. Ending minus beginning is 10,000. So during the accounting period, I manufactured 10,000. So I take my beginning minus my ending equals 10,000. I'm sorry, ending minus beginning, 10,000. That's how much I manufactured during the accounting period. I add that 10,000 to the cost of goods manufactured during the period. So I take my 10,000, which is the difference between these two, yes? 15,000 minus 5 is 10. I add that to the cost of goods manufactured during the period, giving me my total cost of manufacturing cost for the period. Make sense? Good? Yes. So ending minus beginning gives us the 10,000 during the period. Work in process. I add that work in the amount that's been processed during the period to the cost of goods manufactured during the period. You get 180, which is the total costs manufactured during the period. Make sense? It's kind of like the short.
Yes, it makes a lot of sense.
Shorter way of going about it. All right, great. So that's question 3. Question 4. Now here we go into the true-false ones. And a lot of this is knowing the definitions. So let's talk about the definition. Factory overhead. Factory overhead. includes selling and administrative expenses because they are indirect costs of a product. Well, it's an interesting one, right? Now, remember what we talked about. To successfully answer a question, a lot of it is about knowing how to read the question, what parts we're pulling out, right? So, factory overhead. We have an idea of what factory overhead is, right? We also know what selling and administrative expenses are. So if we go to this one's probably going to be chapter 19. Yes. I'm thinking this is 19. So if we go to chapter 19, job work. If we go to chapter 19 and we're saying, factory overhead includes selling administrative expenses. Does it? Because they're indirect costs? Are they? So remember that concept of conversion. So if we come down, we're looking for selling and administrative expenses. We're looking for selling and administrative expenses. Is it not 19? Is it 20? I know we talked about this. I know we did. I know we did. Talked about selling administrative expenses. Looking for selling administrative expenses. I'm still looking. Okay, who can help me? Where are they? Selling administrative expenses. I know we covered it. And remember we talked about the difference between period costs and I'm gonna look at the cost rate. Who can help me? Where is it? Selling administrative expenses. We talked about the differences between period costs and we talked about period costs when we talked about other costs, right? We talked about period costs when we talked about product costs. So, still chapter 18. Question 4, still going to be chapter 18. So, chapter 18, questions 1, 2, 3, and 4. Chapter 18, questions 1, 2, 3, 4. Question 4 says, factory overhead includes selling administrative expenses because they're indirect costs of a product. Well, according to the PowerPoint presentation, chapter 18, slide number 13. This is a one part. It says selling costs are incurred to obtain orders to deliver finished goods to customers. And then it says administrative costs are non-manufacturing costs or staff support of administrative functions. So, overhead refers to production costs other than direct materials and direct labor. Overhead refers to production costs other than direct materials and direct labor. The selling and administrative expenses are called period costs. Okay? And period costs are not attached to the product. So if period costs are not attached to the product, they're expensed out. And the question is asking, factory overhead includes some administrative expenses because they are indirect costs of a product. They are not attached to the product. Does that help to answer this question? Good, right? Cool. Thank you, Mr. Tinsley. Question 5. Oh, now this is another interesting question. This is probably from Chapter 18. How can I tell? It's from Chapter 18. It says, managerial accounting provides financial and non-financial information to an organization's managers and internal decision makers. Guess what? That is the definition of managerial accounting. We're looking for the definition of managerial accounting. This is the definition of managerial accounting. I hope that answers question 5 for you. That's also Chapter 18. Question 6. This is where we move into job order costing, because it starts with job order costing. So question 6, now we're in Chapter 19. It says, job order costing would be used for all of the following except. So in other words, we're looking for one of these 5 options that is not job order costing. Remember what job order costing is. Job order costing, as you recall, is specific customer orders. The products are a little different. There's low production volume, high product flexibility, and low standardization. That's job order costing. So they're more specific, they're more customer driven, they're a little bit customized, right? They're not the same products. That's job order costing. So now that we know what job order costing is, we return to our list on question 6, Chapter 19. It says job order costing will be used for all of the following except. Okay, remember, you might even remember this question. Where did we see this question before? Could it have been on a Chapter 19 homework assignment? I'm thinking yes. So, let's take a look at each option. Conducting an audit. Guess what? That's very job specific. An audit is job specific. It's not continuous. We do it one time for custom. Job specific. Constructing a custom home. That's job specific. Custom home is job specific. Production of a Pixar movie. Again, specific to the job. It's one movie, not multiple. And they're not the same. So it's job specific. Production of wedding invitations. Guess what? That wedding, that's for a customer's wedding, not for everyone's weddings. So it is job specific. Production of running shoes. Running shoes are a homogeneous product. Nike makes millions of these for the majority of the population. So think about each one, and knowing what job order costing is, it's job specific, specific to the customer. An audit, that's specific. Custom home, specific.
Professor.
Movie, specific. A wedding invitation, specific to the wedding. Go ahead, Mr. Tinsley, please.
I'm sorry. Is number 6, is it like multiple answers or just one specific
Just
answer?
one. Just one.
Okay.
Multiple choice.
Okay.
Yep, good question. So we're only selecting one of these. All of the following except. So we know that these first 4 are job specific. That, of course, only leaves one. Sound good? Everyone's with me. Makes sense so far, yes?
Yes, makes sense.
Awesome. Very cool. We're rolling. So, chapter 6, we started chapter 19. Or, I'm sorry, question 6, we started chapter 19. Question 7. Guess what chapter it's probably from? Probably 19. Let's find out. What does this say? At the current year end, Ruiz Company, oh, I love this question. Ruiz Company found that its overhead was under applied by $2,500. And this amount was not considered material. And there must be something else. Based on this information, Ruiz should close $2,500 to finished goods inventory. Why? It's not material. It even says it's over. Found that its overhead was underapplied and it was not material. It could be labor. It could be. It could be that we need to do something with this. Remember, now what do we, your question is, the question. And this is how, again, the reading part is so important for each question. Be very careful when you read the questions. It says, we found that overhead was underapplied. If we underapplied overhead, we need to do something with that. And it says it's not material, so it's got to be something else. So if I go to chapter 19, we're talking about stuff being underapplied. Remember, so keywords, right? Overhead cost. Where's my over under? Over under. Under over under. Here we go. So starting with slide 32. Well, how about that? Similar, it's similar, yes. So, determine adjustments for overapplied and underapplied overhead. Well, this happens to be an excellent example here. Now, yes, it's a different example. The concept's the same. So, if I underapplied factory overhead, and it said it's not material. If it's not material, that means it can't be finished goods, because that's material. Remember, What makes finished goods? Direct material, direct labor, factory overhead. If it says it's not material, it's probably not going to be applied. Carry it to the next period. You can't do that. You can't carry under or over applied overhead to the next period. According to the matching principle, we must apply during the same period. Letter C, do nothing. You already know that's wrong because you can't do nothing. Letter D, carry the $2,500 to other expenses. No, you can't write it off. You need to apply it. So you can't apply it to finished goods. You can't carry it to the next period because that violates the matching principle. You can't do nothing about it. And you certainly can't put it as an expense. So that only leaves us with one choice. Again, Chapter 19, if you look at review the PowerPoint presentation, and you're like, man, I don't remember over applied, under applied. That was some time ago we talked about that. Well, slide 33 and 34 tell us what to do. Well, 33. Yeah, 33. And of course, that part of the chapter in the book also tells us what to do. There's a bunch of examples. Well, I guess this too, right? So what to do? What to do? So if I make an adjusting journal entry, because that's what you have to do with unapplied factory overhead, under or over, this simply tells us, I guess, but so slide 31, 33 shows us exactly the adjusting journal entry that we need to make when there's under or over applied factory overhead. It goes to cost of goods sold. So looking at our options here, it should be very clear. So chapter 19, question 7. Question 8. Question 8 is, a copier center pays an average wage of $12 per hour to employees for printing and copying jobs, and allocates $18 of overhead for each employee hour worked. Direct materials are assigned to each job according to its actual cost. If job number M47 used $350 of direct materials and it took 20 hours of labor to complete, what is the total cost that should be assigned to the job? Okay, so remember the job order cost sheet and the process by which we allocated cost to each job. So we'll come back to our chapter 19 because job order cost, right? We come back to chapter 19 and we come up here to our information. Okay. Job order cost sheet, here we go. So our job order cost sheet shows us direct materials, direct labor, factory overhead applied. To answer this question on the midterm exam, it follows the same exact process as what we see in front of us on slide number 9 for chapter 19. 9:19 for question 8. Chapter 19, slide 9 for question 8. We follow the same process. It tells us the average wage per hour. It tells us the allocation for each employee hour worked. If the employees work 20 hours on the job, 20 times 12 for labor cost. 20 times 18 for overhead allocation, plus direct materials. So a little bit of multiplication here. We take the 20 hours times $12 per hour for labor. So, because remember, direct materials, direct labor, factory overhead. 12 times the 20 hours for labor. 18 times the 20 hours for overhead. $350 for materials. $350 for materials, 20 times 12 for labor, 20 times 12 for overhead, then you add those three totals together to find the correct answer. Make sense? No, that's one of the other math questions, right? Make sense?
Professor, I'm
Could you do me a favor and repeat that a little bit? Repeat that, what you just said.
I can, yeah. Mr. Tinsley, did you have the same question?
No, my question is, so if you go back to the chapter 19, the PowerPoint.
Yes, sir.
So basically what you're saying is for question 8, the employees, the copy center average employees was $12.
Correct.
So how many employees was it? That's my question.
Doesn't matter. So it says that it took 20 hours of labor.
Okay.
Right? So it doesn't matter how many employees, it just says the job took 20 hours. It could have been 100 employees for all I know, I don't care. It says that the job took a total of 20 hours with an average wage of $12 per hour. Doesn't matter how many employees it was. So to find the correct response here, we look at a job order cost sheet. The job order cost sheet consists of direct materials, direct labor, and factory overhead. The direct materials is given to us. The total is given to us for direct materials. It says $350 of direct materials. So for that first column, total for direct materials, it's $350. What I need to find is my totals for direct labor and factory overhead. To find the total for direct labor, we take average wage of $12 per hour times the total hours, 20 total hours. Doesn't matter how many employees there were, it's just $12 times 20 hours. Because remember, it's 20 hours to complete the total job. If the average wage is $12 per hour, doesn't matter how many employees we have. It's the total hours times the dollar per hour. So 20 hours of labor times the $12 per hour wage. So going back to our chart, we got $350 direct materials. We have 20 hours of labor at $12 per hour. So to find the second total, which is direct labor total, 20 times 12 will get you your direct labor total. Now we still have to find overhead. Overhead is also here. It says we are allocating $18 of overhead per employee hour worked. Remember, the thing with overhead is that it's defined by a base activity. Right? The base activity is the amount of hours worked. And we're saying that we're taking $18 per employee hour worked. So if the total job was 20 hours, for overhead, we would go $18 times 20 hours. So the third total for overhead is 18 times 20. So 350 plus your total for direct labor, 12 times 20, plus your total overhead, 18 times 20. You add those three together, you get your total cost. Make sense?
Professor, I got one last question, and I do apologize.
Yes, sir.
So the direct cost is the 350.
Yes.
So whatever your answers are between the 12 and the 20, and then the 18 and the 20, is that correct?
That's correct. Yep. So
Okay.
so
Okay.
direct
Okay.
materials is 350. Your direct labor is 12 times 20, and your factory overhead is 18 times 20.
Thank you, sir.
You're very welcome. Ms. Rhodes, does that help to clarify it for you?
Yes, sir.
Excellent. Very good. Cool, cool, cool. Okay. So, question 9. Question 9 is, and we can tell which chapter it is already. It says, predetermined overhead rates. Predetermined overhead rates. So, going back to chapter 19, predetermined overhead rates. Huh. Well, predetermined overhead rates. Predetermined overhead rates is also called predetermined overhead allocation. Predetermined overhead rates requires an estimate of total overhead cost to be estimated by the activity base, such as direct labor cost, before the start of the period. Predetermined overhead rate is based on direct labor cost applied to the overhead to jobs. The word predetermined means the rate has been figured out already. So, going back to my question, question 9. Predetermined overhead rates are calculated before the start of the accounting period and are therefore based on estimates. Yeah, that's the definition of predetermined overhead rate. So, chapter 19 for question 9, predetermined overhead rate, slide 21. And it's right there in the notes, slide 21. Amazing. Any questions on predetermined overhead rate? Good? All right. Question 10. Oh, this question looks familiar, doesn't it? Where have I seen this one before? Period costs for a manufacturing company, such as selling and administrative expenses, are recorded directly to work in process inventory as they are incurred. Okay, let's break this down. Period costs. Period costs are expenses. We talked about this. Period costs. Period costs. I remember talking about it. Where might it be? We just talked about it recently, didn't we? Period costs just talked about period cost. 20 already. Period cost. Sounds like 18 to me. Yeah, 18, right? It sounds like 18. No, we just talked about it, didn't we? There it is. Look at you, 18. Okay. And we talked about period costs already because we covered that in a previous question. It said, it talked about period costs, didn't it? Something along those lines. What's it? I'm losing my mind. Okay, period costs. Let's just talk about period costs. I'm pretty sure we already did though, because, oh, you know what it was? Because we were talking about selling and administrative expenses. That's why I knew we talked about it earlier. So Chapter 18 told us, that period costs are expenses not attached to the product. Well, man, it doesn't get any easier than that. So if period costs are not attached to the product, and the question is predetermined, oh, I'm sorry. The question is, period costs are of a manufacturing company such as selling administrative expenses are recorded directly to work in process when they are incurred. No, they're not. It just said that period costs are not attached to the product. So why would we add it in to work in process? We wouldn't. Does that help to answer question 10? Question 10, chapter 18. Question 11. Question 11 says, oh, and this is where we change chapters, I can tell. Question 11 says, Clarkson Company uses a process costing system. Well, in that case, I'm going to jump over to process costing, chapter 20. Remember, it's all about reading the question, pulling out the key terms to figure out where things are. Process costing system, chapter 20. The company requisitioned $93,000 of material for Department A and $67,000 of materials for Department D. Remember, requisition means I'm requesting to pull that dollar amount of materials out of some other place, right? Raw materials, probably. So, if I'm pulling stuff out of raw materials, I'm requisitioning it, right? So, remember, we talked about requisitions. Chapter 20. We talked about requisitions. I know we did. No, we did. Requisitions. Sorry, I know it's here. Requisitions. Oh, yeah. Remember when we talked about requisitions? We're transferring it from one department to another. We're getting it out of another department. Requisitioning it. Requisitioning. We're pulling it out of somewhere else. Requisitioning. Talked about the physical flow. When I requisition, I'm taking it out of raw materials. So, I'm taking it out of raw materials, I'm putting it into work in process for two different departments. We have a perfect example of that here on slide number 23, chapter 20. So, question 11. We're requisitioning $93,000 of materials for Department A and $67,000 of materials for Department D. What's the journal entry that we make? Well, we have a perfect example of that in the chapter 20, slide 23. It's the second transaction here. I debit work in process inventory, Department A. I debit work in process inventory, Department D. And I credit raw materials inventory for the total. So, looking at our options here, I debit work in process, Department A. I debit work in process, Department D. And I credit raw materials inventory. There's only one option that does that. Make sense? Remember, when we're talking about process costing, we're talking about the physical flow. When we requisition something, we're requesting it from another area. In this case, we're requesting raw materials. So, question 11 is going to be chapter 20, slide 23. Example is going to be transaction 2. On to question 12. We're almost done. Process cost summary. This is a definition question, as we can tell. A process cost summary is a managerial accounting report that describes all but which of the following. In other words, except. Right? Process cost summary is a managerial accounting report that describes all of the following except which one? Process cost summary. Process cost summary. Well, process, chapter 20. Cost summary report. Process cost summary report. Where are you? Here you are. Process cost summary report. Looks like you see a lot of physical flow here. Yeah. So it's all about knowing what is on the process cost summary report. That is how you will answer question number 12. Make sense? Question 12. Process cost summary report. That's chapter 20. Process cost summary report. Question 13. Oh man, this is a great question. This also looks familiar from a certain homework assignment from a certain chapter. Direct labor and indirect labor are recorded respectively to Man, if you don't get this right, I don't know what to say. I've failed you if you don't get this one. Direct labor. We know that we can directly trace direct labor to the manufacturing process. Direct labor. Well, the manufacturing process only happens in work in process. Direct labor is tracked to work in process. And indirect labor, remember, things that we cannot directly trace, but are a part of the manufacturing process. We call that factory overhead. And hopefully you remember that discussion. That was a long time ago. Chapter 18, direct materials, direct labor, factory overhead. We talked about labor. We talked about how labor is both direct and indirect. Direct labor is a prime cost, part of the manufacturing process, and is applied to work in process inventory. Because remember, direct labor are the employees working directly on the product. Indirect labor is labor that I cannot directly trace to the process. Examples of factory overhead include indirect labor. So, question 13 is asking, direct labor and indirect labor recorded. 2, direct labor is a part of work in process. Indirect labor is factory overhead. Well, there's only one of these that fits that criterion, right? That's question 13. Question 13, that's all the way back to chapter 18, my friends. Question 14. 14, true or false? Materials consumption report is used instead of materials requisitions in companies where materials move continuously through the manufacturing process. Let's break this one down, okay? Because this one's a little tricky. There's a couple of key terms here. Well, there's one big key term. Where materials move continuously through the manufacturing process. Where materials move continuously through the manufacturing process. That's process costing. Remember, job order costing is specific to the customer's order. Specific, yes? Process costing is where materials are continuously being processed. So, question 14 is definitely going to be found in chapter 20. And the question says, material consumption report is used instead of material requisition. See that? I don't know. Let's think about that for a second, right? So that we have to know this. We have to know what reports are generated in work in process. What kind of reports we have? So I know we have a cost data report. I know that we have process operations. I know that we have equivalent units of production. I know that we have a couple of things. Right? So the question is types of reports, right? So the question is, which report is used here? Do we use materials consumption report, or do we use material requisitions when products continuously move through the manufacturing process? Well, chapter 20, I don't recall any report being called materials consumption. It doesn't sound right, materials consumption. Materials consumption, what is that? I'm using materials. Yeah, but is there a report for that? See that? I don't know. What I do know is that there is a process called requisitioning for transferring for transferring raw materials to work in process through this thing called requisition. I do know that. So remember, it's all about knowing which reports are part of process cost. And that's question 14. You're going to find that in chapter 20. Question 15. The cost of units transferred from work in process to finished goods inventory is called the cost of goods manufactured. Yeah. The question is, what is the definition of cost of goods manufactured? Cost of goods manufactured, try to remember now, cost of goods manufactured. Cost of goods manufactured, is that 21? Oh, sorry, I already had that one on. So, that would be the silly here, hold on. Chapter 21. Sorry, I didn't have it open earlier. No, this is cost volume power. Cost of goods manufactured. Now let's try to remember where cost of goods manufactured. We talked about that recently, but not too recently. Cost of goods manufactured. Oh, it's here somewhere. There it is. Cost of goods manufactured. Cost of goods manufactured, chapter 19. Silly thing I was looking for. Cost of goods manufactured. Cost of goods manufactured show us direct materials used, factory overhead. We're taking it out of work in process into finished goods inventory. Cost of goods manufactured. So yeah, this one's a little probably on the obvious side. So question 15, you're going to find that in chapter 19, cost of goods manufactured. Question 16. Oh, question 16, this is going to be chapter 21. Question 16, chapter 21. A statistical method for identifying cost behavior. This is a definition. So I go to chapter 21, and it's talking about statistics, so I could probably already tell you which one it is. We're talking about cost behavior, and we're talking about statistical method for representing cost behavior. Now, statistical method. For cost behavior. Well, it says a statistical method for cost behavior, for identifying the cost behavior. Statistical method. Well, there's a couple of these methods, aren't there? But of which one is a statistical method? Statistical method. Well, according to regression, the least squares regression is a statistical method for identifying cost behavior. Again, it's a definition. So least squares regression method is a statistical method for identifying cost behavior. So question 16, chapter 21. Question 17. The company manufactures a product that sells for $50. So sales price $50. Has a variable cost of $24 per unit. The company's fixed costs are $260,000 total. We're thinking about buying a new production machine that will increase our fixed cost by $11,400 per year, but will decrease the variable cost by $3.50 per unit. It says contribute the contribution margin if the machine is purchased. Okay, so here's a few steps to this problem. The first thing you need to understand is we're talking about contribution margin. And when we're talking about contribution margin, we're talking about chapter 21. When we had the whole conversation about contribution margin, right? Sure we did, contribution margin. Pretty sure we did. Margin of safety, all that jazz. We talked about break even. There it is, contribution margin. I knew it was there. Okay, contribution margin. We know that the contribution margin per unit is calculated by taking your sales price minus variable cost. So we understand the formula for contribution margin. But look at the question. Okay, this is where the question gets interesting. It says the current sales price is $50 per unit. Variable cost of $24 per unit. Fixed cost of $260,000. We're looking to buy a new machine. If we buy the new machine, my fixed cost will increase by $11,400. So that tells us the first thing we need to do is add $11,400 to $260,000. Because remember, the question says compute the contribution margin per unit if the machine is purchased. So the assumption is I'm going to purchase this machine. It says that if I purchase this machine, my fixed cost will increase by $11,400 per year. My current fixed costs are $260,000. So I'm going to take my $11,400 plus $260,000 to get my new total fixed cost. It also says that if I purchase this new machine, my variable cost will decrease by $3.50 per unit. My current variable costs are $24 per unit. So what I need to do here is take 24 minus $3.50 to get my new variable cost if I purchase the machine. So I need to compute the contribution margin per unit. Contribution margin per unit is sales price minus total variable cost per unit. Well, sales price is $50. My new variable cost is 24 less 350, which is what, 2150, right? So 24, oh, I'm sorry. We're looking at contribution margin if the machine's purchased. So where am I? We are talking about, oh, okay. So contribution margin per unit, sales price minus variable cost. If we're going to compute the ratio, is that darn slide? I thought I had this. Apologize. I'm looking for where is it? Where is it? Oh, okay. So sales minus the new variable cost. That of course will get you the response for question 17. Now the new variable cost is $24 minus $3.50, which is $21.50. 50 minus $21.50. And that will give you your correct response for question 17. To find the formula for that, you want to go to chapter 21, slide number, sorry, I lost it again. Going too fast. That is my good. Slide 18, chapter 21, will help you to correctly answer question 17. Question
Professor.
19. Yes, Mr. Tinsley.
Go back to question 17.
Yes, sir.
So if you go to your PowerPoint slide 21.
Slide 18, chapter 21.
So the contribution margin price unit equals sales price per unit minus the total variable cost.
Correct.
So my question is, so what I'm confused is, what is the $50 for?
That's the sales price. Products that sells for $50. So that's the first part of the formula, sir. Sales price per unit, 50. Minus total variable cost. Now remember, Mark, this is the important part. It says compute the contribution margin if the machine is purchased. And it says if I purchase that machine, my variable cost will decrease by $3.50. My current variable cost is $24. If I purchase that new machine, my new total variable cost will be $21.50. 24 minus $3.50. So the formula is sales price, $50, minus new total variable cost, $21.50. So 50 minus 21.50 is my contribution margin per unit.
So how are you getting 21.50 and I'm getting a total different number?
I don't know how you're getting a different number. So let's look at the question. Let me break out my calculator. Maybe I'm getting the wrong number. It's possible. So if I break out my calculator and
if you take 24, take away $3.50, that
what do I get?
I'm not trying to give the answer, but it would be $20.50 instead of $21.50.
Oh, hold on a second. Yeah, you're probably right. But here, let me just. I probably did it too fast. Yeah, let's do it real quick. 24 minus $3.50 is $20.50. You are correct. So, interesting. Oh, yeah, it's there. Yeah, you're correct, Mark. I'm sorry about that. I must have been adding too quick or subtracting. Went too fast in my mind.
That's what I was confused
Sorry
on.
about
Like,
that.
okay, what like I'm paying attention and I'm taking notes, but I'm also trying to make sure that it comes out to where, because I'm like, okay, Professor, you're going a little too fast now.
I'm going a little too fast. My math's a little fuzzy today. So so sales price minus the new variable cost, 24 minus $3.50 is $20.50. So 50 minus $20.50 will get you your contribution margin per unit for question 17. Thank you, Mark. I apologize about that for the confusion. Sometimes I go too fast in my mind. Yeah. The older I get, the more confused I get sometimes. Okay, next question. This is also probably going to come from, let's see here. Yep, it'll probably come from chapter 21. Operating leverage. Question 18 says, the company is reporting total contribution margin of $48,000 and pre-tax income of $12,000. What is the degree of operating leverage? or it says the degree of operating leverage is, same thing. It's asking what is the operating leverage. So in chapter 21, we talked about operating leverage very briefly. We talked about operating leverage. Let's see if I can remember where it is. There it is. Okay. Operating leverage. The degree of operating leverage. The degree of operating leverage is the total contribution margin in dollars divided by pre-tax income. So the first thing we need to do is find total contribution margin. My total contribution margin is $48,000 given to us. Divided by pre-tax net income. Everyone's good there? It's all a matter of knowing the definition of operating leverage, the formula for it, and you just plug in the numbers. 48,000 divided by 12,000 for question 18. That comes from chapter 21, slide number 44. Question 19, also a chapter 21 question. How do I know? It says a cost volume profit, which we know is chapter 21. Cost volume profit chart is a graph that plots number of units produced on a horizontal axis and dollars of cost and sales on the vertical axis. I don't know. Is it? I'm not that great with charts. It's just not one of the things I like. But let's see if we can find the cost volume profit chart. Here it is. Slide number 24. On the x-axis, I have volume. On the y-axis, I have dollars. I think I did that right. X is horizontal, right? Y is vertical. It says horizontal is units. Yes. Dollars is on the vertical axis. Yes. So, to answer question 19, chapter 21, slide number 24. The last question. Sorry, we went a few minutes over. The last question. Question 20. Under absorption costing, fixed overhead costs are excluded from product cost. Under absorption costing, fixed overhead costs are excluded from product cost. Absorption costing. Absorption costing. The word absorb. The word absorb means to, it's like a sponge. Yeah? It absorbs all of the cost. Absorption. Absorption, all of the cost. The word absorb means to include all of the cost. Did we talk about absorption costing? So long ago. I don't know if we did. Did we? We must have. It's right there. What's in the appendix?
Slide 42.
Thank you so much. Oh my God. No, we did. I thought we did. I'm trying to remember if we did. Absorption cost. Absorption. Well, that would be appendix. Absorption. There it is. Okay. Sorry. Slide 48. Absorption costing. Absorption costing includes direct materials, direct labor, and all factory overhead. That would include fixed and variable factory overhead. So the question is, under absorption costing, fixed overhead costs are excluded from product costs. I don't think so. I'm pretty sure they're included. It says includes direct materials, direct labor, and all overhead, variable and fixed. So to answer question 20, slide number 48, chapter 21. My friends, that is our review of the midterm exam. Any questions? And the remaining questions? Y'all good? Okay. All right. So it's 20 questions, mix of true, false, multiple choice. A few math ones. We just went over all of them, and I told you where to find the responses to pretty much every question. I didn't give you the answers, but I did show you how to find them. Now, again, it's 20 questions. That also means it's worth 20% of your grade. The exam is open and available now. Do not, and I repeat, do not wait till the last day or minute to take it. That is a great way to stress yourself out. I don't like stress. I don't like anxiety. Tests give me anxiety. So the way I like to approach this is one question at a time, okay? You know where to find the answers. You know how to read the presentations, and you know how to go through your book and look at everything we talked about. Be very, very, very careful on how you read the questions. That's where everyone gets tripped up, is how to read the questions. We're looking for specific identifying information in each question. It's a matter of pulling that data out and understanding what the question is asking. That's how you'll be successful. And with that, are there any other questions, comments, concerns? The midterm exam, the date right now I have it for March 1 is when it should be submitted. That may change. I'm still waiting for the university to give me like a specific date, because there's certain dates that they want these submitted by. I don't know why. But just make sure it's completed before then. My recommendation is that you start it much earlier, because, again, you want to take your time. You can save and close it. It's not timed, so you can come in, save your work, close it, return to it. You know, look at your notes, look at your book, look at your PowerPoint slides, all that jazz. Just take your time. You'll be all right. I hope this was helpful. We went through each question, and I did my best to explain everything and where to find it. And, I tried to break it down for you as much as I could. So I hope.
Professor, I have one question real quick.
Yes, Mr. Tinsley.
I do apologize. So if the university does not give you a date for the midterm exam,
We'll stick with March 1.
If we submit it by, I'm gonna say February, hold on.
You'll be more than safe, as long as it's submitted before spring break. I mean,
So let's say if we submit it by February 28th, is that still enough time for us to submit it?
Absolutely.
Okay.
Yeah, 100%. February 20, because this week it's only review. The real midterm week doesn't even start till next week.
Okay. Thank you, Professor.
You're very welcome. It's my pleasure. Yeah, hopefully this was helpful and that you all got something out of this. That's what it's all about. Right? So with that, if you have any other remaining comments, questions, or concerns, feel free to get it with me, office hours, email me, call me, all that jazz. We also have the tutoring available through Dr. Remy, and all that good stuff. We're always here to help you. So with that, I wish you all the best on the exam. I'm sure you'll be fine. Remember, just take your time, start it early, save your work often, take your time. Remember, once you hit submit, it's done. So don't only hit submit until you're ready to submit all your work. And answer every question. Don't leave anything blank for whatever reason. So, okay, wish you all the best, and as always, stay safe, wash your hands, do the right things, and the next time we see each other is actually going to be a while, yeah? Next week is midterm week, the week after spring break. So I won't see all of you again until March 15th. Is right? March 15th? Does that sound right? I think it is. That's next time we meet. So enjoy the next 2 weeks. Do your best on the exam week. I know that's stressful, but just try to pace yourself. So great. Well, thank you all so much for your time. Appreciate all of you. Wish you all the best. Thank you so much. Bye.